Hello, what's up? What's up, my people? It's your boy Mr. Kidiwa now. So there's a pair that got a request of somebody asked me to do a pair on GPPCHF. Now, if you go to the GPPCHF and he was kind of looking for a long-term setup, basically uh, for swing. Now, when you come to this pair, as you can see, let's go a little bit higher. Now, if you go to the weekly chart, because remember, a projection like this pair, if you look at it, it's clear it's in a bearish direction. So we had a projection here. This was my old time, my old analysis. Probably this is maybe when was this? Uh, Around 26. When was this? Around December, of course. So this pair projected to get a shot from here. So right now we are in a little bit of a confusion, a correctional phase on a bearish market structure, which if I look at it in terms of long term, I'll say it doesn't meet the rules. Like these levels don't qualify. In fact, the sale that happened here, uh, this old supply was actually on a daily time frame. Still did not like qualify to my rules, but at least it was a little bit adjustable to say we could short it from here. But now, wait, is I'll say, to be honest, I don't see a high probability zone to really trade, except if it can come all the way to this area where supply beats demand and we have a big dive to the downside. So, so I'll say this, honestly, let's try to replace, if you still want to trade the GP, NAJ CHF pair, we can do a replacement. So right, let's do this. We can do a replacement on CHF pair, and I give you maybe another pair that is CHF but still has a good probability than this one. So let's look for Australian versus the Swiss franc. Yeah, I think this one has at least a clear structure, to be honest. Which broker can we use here? We can use, okay, here we can use Rwanda. Rwanda is good. We can use Rwanda here to do analysis. So here we'll still go to, on this one, we just go to a monthly time frame, uh, just to spot direction. Now, on a monthly time frame, if you look at this pair, it's just in a very clear bearish structure. Or you can say supply is in control. That's the direction. So if we have a direction, it's easier to spot location because I only have 3 steps. I follow 3 steps process, direction, location, then we're prepared to go in, maybe what you call timing or what you call the entries. So here we have a very clear drop, a monthly drop. But of course, when it comes to, sorry, when it comes to positioning, we'll say we can see this is a place where we have the market moving a little bit sideways, then we have the drop. So between this area, this one is indecisive, we have a drop. So here we have a zone. So with my rules, I'll say if price can do this correctional phase inside this area, then expect the market to come, like to go down. Because when you look at the Australian dollar versus the Swiss franc, it has a very clear structure, which means that in terms of bias, you have a clear bias, which is a bearish bias. So you just need to identify the location, a good place whereby price is too expensive to go short from. So here you can see drop, correction, then you have clear drop. So if we go to the weekly time frame now, we look into this monthly structure and we want to identify a basin in this place And if you look at this area, we have two areas of interest actually. We have base, like we have like here, drop base, rally base, base, drop, base, drop. So here we have two areas. We have an extreme supply and we have this one here. So here we can just say around this place. So we have two areas of interest here, levels of other levels, at least we can say closer to each other, actually, these zones. Now, if we have these zones here, we can say, if you look at the basin here, at least we have a clear basin. This one's better, but the patch is not like good as here. But if you look at this, we can be able now to say we have a clear bias. We have our locations where price is coming to. And currently the market's in a correctional phase. On a weekly chart, mostly when the market is in like, if we lack demand and supply, of course, price would tend to move sideways. So we are bearish, but right now you can say short term, the daily direction, we are very bullish back to these areas. Personally, with my system, I trade only continuations. I don't take corrections unless higher time frame corrections like monthly, 3 month, and weekly, but daily corrections, they don't work well with me. So I'll say anticipate if price can push, because these are weekly levels here. So inside this weekly, I believe if we can get to rally all the way inside here and we find a better zone inside this weekly zone, then this could be worth the risk to do it, to attempt and take our short position from there. Or else, if we go all the way up here, again, it's worth the risk to go short. So I only have one bias to go short. The only problem becomes where, because which zone is better to go in. Here's when you split the risk because you have two areas closer to each other. You don't know which one will play out well, but at least you know where to end the trade. So what do? You split your risk. If you take 1% risk, maybe you take 0.5% here. If it fails, another 0.5% here. Or you can decide to say, I'll put on 1% risk in these two levels in one entry. So since daily time frame, I mean weekly time frame is a larger time frame, we can now zoom in inside inside the weekly zone and identify our daily areas for entries. So when you come here, we'll say inside this remember this one is a multi-time frame zone, like this is a monthly zone, which when you look inside it, we get what we call the weekly structures, weekly zones here. Now that we have the weekly areas, now we prepare to go in for entries, which now I step into the daily chart. And that's where I feel more comfortable when I take setups on daily timeframes because they just come with bigger probability. So here, everything is mitigated, nothing's fresh at the extreme, but at least this could be a clear basin to say, go short from here. But meanwhile, before that, we can see here a little bit of sideways moves, but the last refined area is here. Okay, this where we have a clear basin before the drop. Most of these areas here are all mitigated. So if price can push higher, let's say now, you can see now you have two areas, two pivot points that are very clear, here. So if, let's say, because this one's now a daily correctional phase, which is against the weekly, monthly, and the rest of the larger time frames. So this correctional phase, I don't want to really say I take a buy all the way here because market always struggles with corrections, but continuations becomes easy. So if we push all the way to this high, then it becomes worthy to go short from that area. If I put my entry here and maybe I hit a sell, I'm good. I'll say it met all the rules I want, so I'll not find it difficult to deal with it. So this area being my zone of interest, I pay much attention first on this one. If it fails, then This will be my next place. So when it comes to this pair, I have only 2 specific places to enter the trade. But as for now, because we still need time, maybe this week, maybe early next week is when you will get this drop. This is a problem with swing trading, that you have to stay uh, out of the chart for some time for market to hit your high quality areas. So, but if the market comes here, I always trade with the pending orders. I don't have to wait for price to hit this area. When it approaches this area, I just keep monitoring. If I notice the market somewhere here, I know it's closer to the zone, measure my levels. My stop is always quarter of my entire level. That. Then my entries comes here. As easy as you can see, my stop loss up, then target the low. So let's say in this market, the low is here, the low here, and of course the price can drop further because we don't have a demand, and this becomes my target here. So this is around 520 pips, almost 530 pips, let's say. So this one is a trade which is 5R. This means that whatever you risk, you get it 5 times. If you have a 50K account, of course, you risk $500, which is 1%, and you target to make 2,500. It's more realistic and achievable. But if you're someone who prefer to say the zone is bigger, you want to refine, that is also optional. But for my case, I look at the entire zone, then I just put in the risk I feel I'm comfortable. So if I'm trading this entire zone, I say I want to risk $200. I look for the lot size that can only accommodate the $200 risk, then I'll put it in. If I have $50 account, of course, on a normal, just for obviously any trader will say, $50, I can't trade this entire zone, the stop loss is big. You ask yourself, which type of risk do you take? You can decide to have, maybe you be risking $5 or $10 per trade. Of course, realistically, you can say $10. So out of 50, you risk $10 and you are left with 40. This means that for you to blow a $50 account, you need to have 5 losses back to back, which I mean, if you have a system that works, you can't lose $50, all of them. Like you can't have 5 losses back to back. So here, put in risk $10, put in your trade, then target to make the risk $10, you target to make 50. So you see, the problem comes in when your order is filled, because now when price hits the level, the work is now to give the market to do the heavy lifting to push price all the way here. It's so unfortunate that if you're not a patient guy or type of a person, probably you might not be able to hold longer, because market can hit this area and let's say good news comes out, not good news, because in the market, bad news always push price lower. So price drops and gives you candles like this, then maybe it takes a shorter period of time and it drops. But again, if we don't get volatility we expect, price can struggle. By the time you hit this area, maybe 1 week, 2 weeks, 3 weeks, you don't know. But at least you take advantage of the continuation and the strength of the larger time frame. So guys, that's my idea on this particular pair. If you have a different idea, option, maybe you can drop it in the comment section. You have a different pair, you want me to do the analysis on it. My analysis definitely is always based on swing trade, so I'm not going to give you analysis for scalping or maybe a setup for day trading, but long-term setups, of course, this is your home, this is your place. So drop your opinions and let's see what you should expect. Otherwise, it's your boy Kidiwa. Make sure that you follow, subscribe, and see you soon in the next video.